Hi everybody, it's FIBO Group and you are watching to the Market Watch review. Today's main developments are a rising yield and falling equities. The US 10-year yield has risen to 1.80%, while the 2-year yield has risen to 1% for only the second time since February 2020. The European market is down around 1.1% after yesterday's 0.7% increase. Futures in the USA are 0.1%, 1.5% lower. Today, the dollar is stronger against all currencies. The most resilient of the major currencies is the Canadian dollar, yen, and Swiss franc. You shouldn't expect gold to be a great haven. The yellow metal is at a 5-day low of $1,810. March WTI is pushing towards $8.05 as oil prices continue to rally. It was slightly lower than $75.00 last month. Asian Pacific market. Kuroda, Bank of Japan governor, resisted creeping speculations that the central bank would soon adjust interest rates. Some talk has suggested that the BOJ may raise rates before the 2% core inflation target is met. The Bank of Japan revised its inflation as well as growth forecasts. The greenback recovered half of its loss from January 4 when it fell to a multi-year low of 116.35 due to early buying. In the European morning, the dollar has retreated to the 114.50 level due to its risk-off attitude. 5-day lows of $0.7200 are being recorded for the Australian dollar. Market of Europe. The UK employment data was stronger than anticipated, and the unemployment rate fell to 4.1% from 4.2%. The median forecast of 130,000 predicted that December's payroll growth would be 184,000. The ZEW survey in Germany showed a greater than expected improvement in the expectations, but a more pessimistic assessment about the current situation. Although the euro saw a significant downside reversal prior to the weekend, there has been little follow-through selling. It hit a 4-day low of $1.1385 in Asia, and it has held steady in Europe so far this morning. Sterling has been absent for the third consecutive session. This is the longest losing streak in more than a month. Market of America. The market is more concerned about Fed policy's future. Economic confidence is declining, as both the Beige Book and preliminary University of Michigan consumer surveys have shown. Canada reported December housing starts and expects another strong gain. The most important thing is that the market seems more confident that the Bank of Canada will raise its rates as soon as next week. After falling nearly 4% from its December 20 high, the US dollar seems to be entering a consolidation phase against the Canadian currency. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.